Malaysia's stock exchange is known as Bursa Malaysia. It is located in Kuala Lumpur and was originally known as the Kuala Lumpur Stock Exchange. There are 801 listings on the exchange denominated in Malaysian ringgits. The total market capitalization of the exchange is close to $400 billion US. Malaysia has a significant Islamic population, therefore is offering a wide range of Shariah-compliant products on the exchange. According to the International Monetary Fund in 2020, Malaysia's economy is the fourth biggest in Southeast Asia. It is also the world's 36th largest economy. Due to a high density of knowledge-based businesses and the adoption of cutting-edge technologies for manufacturing and the digital economy, labour productivity in Malaysia is substantially greater than in neighbouring Thailand, Indonesia, the Philippines or Vietnam. Malaysia's economy is ranked 27th most competitive in the world, according to the Global Competitiveness Report of 2019. Malaysians live in relative luxury compared to virtually all other Asian countries, only coming close with only Singapore and Brunei. This is due to a rapidly developing export-oriented economy, a low national income tax, extremely inexpensive local food and transportation fuel, and fully subsidised single-payer public health care. Malaysia has a freshly industrialised market economy that is open and state-led. Malaysia's economy is strong and diverse, with high-tech items exporting at the second highest level in ASEAN behind Singapore. After Indonesia, Malaysia exports the second largest volume and value of palm oil products in the world. Despite government initiatives aimed at increasing per capita income in order to accelerate Malaysia's transition to a high-income nation by 2020, wage growth has been sluggish, trailing behind the OECD average. Cost of living assistance, a social welfare benefit with direct cash benefit transfer, has also been in existence since 2011. To cut deficits and satisfy federal debt commitments in 2018, the government ramped up steps to generate income by implementing the sales and service tax at a rate of 6%. International commerce is highly important to Malaysia's economy since it is one of 3 nations that govern the Strait of Malacca. It was formerly the world's greatest producer of tin, rubber and palm oil. Manufacturing has a significant impact on the country's economy, accounting for more than 40% of GDP. Malaysia also has the largest Islamic banking and financial centre in the world. In the 1970s, Malaysia's economy began to shift from a mining and agricultural-based economy to a more multi-sectoral one. Malaysia will become the world's 21st largest economy by 2050, according to a 2012 HSBC estimate, with a GDP of $1.2 trillion and a GDP per capita of $29,247. According to the study, electronics, petroleum and liquefied natural gas producers would enjoy a significant increase in per capita income. Malaysia's long life expectancy, relatively high level of education, and above average fertility rate will all contribute to the country's rapid growth. Credit Suisse's Managing Director Victor Schwetz said that Malaysia has all the essential components to become a developed nation. Malaysia ranks 6th in the world in the World Bank's Ease of Undertaking Business Index. Malaysia's strengths in the ranking include acquiring credit, ranked 1st, safeguarding investors, ranked 4th, and doing cross-border commerce, ranked 5th. Dealing with construction permissions is one of the weaknesses, ranked 43rd. Malaysia received a perfect 10 for the degree of disclosure, 9 for director culpability, and 7 for shareholder litigation in the survey's investor protection category. In the survey's investor protection category, Malaysia trails Singapore, Hong Kong and New Zealand. Malaysia's industrial sector accounts for 36.8% of the country's GDP. The electronics, automotive and construction industries all contribute significantly to the industrial sector. Kuala Lumpur has a significant financial industry and is placed 22nd in the Global Financial Centres Index. The rate of capital gains on the sale of Malaysian shares for a seller who is not a Malaysian citizen or permanent resident is 30% for disposals within 5 years of acquisition and 10% for disposals more than 5 years after acquisition. The Department of Statistics Malaysia website is a great resource for equity research on that market. First, with more than 100 regions covered, you can learn more with the Exotic Markets book available on Amazon. Second, you can explore sector and industry intelligence for different countries by going to pervasives.com. If you have an issue in relation to accounting and tax with foreign stocks, you can contact us by going to our website.